If you were a real estate agent in the early 2000s, you would know much about FHA Insured Loans. These loans have long been sought after by today's home buyers because of the many benefits they offer. As an agent today, the requirements for these loans are a bit more stringent than they used to be. But these loans still aid in helping to support the dream of home ownership in the United States. You'll need to understand what these loans are and who they are good for. Also, learn a few more details that can help you encourage buyers to look towards these loans. One of the reasons to do just that is because of the ease of qualifying for these loans. Many of today's first-time home buyers want to buy a home but lack information about the availability of loans. Those without down payments, limited experience, and moderate credit shouldn't be turned away from your service. Rather, encourage these potential home buyers to seek out FHA loans. So, what are FHA insured loans? An FHA loan is a type of mortgage. It is not issued by the Federal Housing Administration, but it is insured by the organization. Any lender that offers this type of loan must meet specific qualifications. These loans were first created in the 1930s as a way to help individuals struggling through the Great Depression get back into homeownership. During this time, the number of foreclosures rose drastically, making it necessary for the government to offer loans with fewer requirements. The goal of an FHA loan is to provide access to home lending by those who may not otherwise qualify. Because lenders cannot afford to take on what they deem as high-risk loans, FHA loans help to reduce some of that risk. If a home buyer obtains an FHA loan and defaults on it, the federal government covers some of those losses, limiting the impact on the lender. These loans offer some key benefits, including lower interest rates. Because the federal government insures these loans, the lender is facing less risk. As a result, they are more willing to offer loans at a lower rate. By the same token, there are fewer other requirements as well. Credit qualifications are reduced. Home buyers do not have to have a high down payment either. Now, what is the difference between an FHA loan and a conventional loan? As we've noted so far, these loans have a number of reduced requirements. Conventional loans typically require a 20% down payment. Here, that's reduced to 3.5% for an FHA loan. Conventional loans also have a higher credit score requirement. Home buyers need to have a credit score of at least 580 for an FHA loan, but for a conventional loan, this is typically at least 620. However, every lender has different requirements. Additionally, it may be possible to purchase a home with an FHA loan if a credit score is even as low as 500 if they have a larger down payment of at least 10%. From a real estate agent's point of view, this is important. When interest rates and down payment requirements are lower, it may mean that your home buyer can qualify for a higher priced home. That's because their monthly payment will still remain within reach with the significantly lower interest rates. Considering this, you'll want to understand more about how these loans work and when they can apply to the potential home buyer standing in your office ready to buy. Let's consider the types of FHA loans available. FHA loans are available for many types of property, as long as the buyer lives in it. In other words, it does not apply to rental property. FHA loans are available as 15-year loans or 30-year loans. Legally, they are not available for longer than 30 years. What are the requirements for an FHA loan? We've touched on a few of these previously, but for clarity, let's outline what the specific requirements for an FHA loan are. This is one of the first questions your homebuyers will ask you when they inquire about purchasing a home and you recommend this loan. It's also important to note that these rules can change from year to year. They can be updated by the Congress from time to time. First, there's the minimum credit score requirement we've already mentioned. Those with a credit score of at least 580 should consider applying for a home loan. For those with a score under this, even as low as 500, it is still possible to obtain a loan with 10% down. To qualify under this secondary requirement, the loan-to-value ratio must be at 90% or less. That means the home loan must be at least 10% higher than the amount borrowed. Next is the down payment requirement. A down payment helps to reduce the lender's risk, and it is always best for borrowers to put down the highest amount possible, since it reduces how much they will end up financing through the loan. With FHA loans, borrowers should have at least 3.5% down. There is also a requirement that individuals be a first-time homebuyer. However, this isn't as clear-cut as it may seem. Obviously, those who have never purchased a home through a home mortgage will qualify in this area. If the home buyer owned a home previously, and if they have not maintained a loan in the last 3 years, they may still qualify. If they have not been a primary borrower, they might qualify. Additionally, if one spouse has owned a home but the other has not, they can still obtain an FHA loan. Another qualification occurs when a divorce occurs and the individual has divorced. Those who own a mobile home or an RV, it is still possible that they could be considered first-time home buyers, as long as the property is not permanently attached to a foundation. FHA loans also take into consideration income. However, it does not have a specific dollar amount attached to it. Rather, FHA loans look at the debt-to-income ratio of the borrower. That must be no more than 43%. That means the amount of debt they have should not be more than 43% of their income. There are other qualifications as well. For example, individuals will need to have a credit report clear of all delinquencies. Those who have not made payments on loans previously, or those who have unpaid debt to child support or back taxes, may not qualify. What are they buying? As noted previously, FHA also wants to know what type of home is being purchased. It wants to ensure the home is safe and worth the value of the home sale price. This is another area in which conventional loans and FHA loans differ. With conventional loans, there's less focus on the safety of the property and more focus on the value. The FHA requires the home to meet specific safety, security, and soundness standards. When the homeowner decides to buy a home, a full FHA inspection will be necessary. This is a bit more thorough than the average house inspection because it looks at factors such as whether the property is pest and mold free, has safety railings in place, and is lead free. If there are concerns, they may need to be repaired prior to the lender approving the loan. The type of home plays a role in whether or not a person can qualify for an FHA loan. The home must be the primary residence of the borrower. It must be owner-occupied. It can be used for most types of homes, including detached and semi-detached houses, row homes, condominiums, townhomes, and others. What about mortgage insurance? Like with most conventional loans, mortgage insurance premiums are required on FHA loans. This is 1.5% of the loan amount borrowed, and it is paid up front. However, most homebuyers will roll this amount into their mortgage. In doing so, your homebuyer does not have to have this amount available at the time of their home purchase. This insurance is a bit more expensive than what is paid through conventional loans, which require private mortgage insurance. Also important is that, unlike conventional loans and private mortgage insurance, FHA loan borrowers must pay mortgage insurance premium coverage for the life of the loan. When your homebuyer walks in and tells you he or she does not have much of a down payment and their credit history isn't the best, point them in the direction of FHA loans. Though not everyone will qualify, many people who are already paying high rental costs will find these loans much more accessible than conventional loans. That doesn't mean everyone should buy a home. They still need to be able to afford it. Yet, FHA loans help to make it more likely that the home is in good condition, the borrower has the means to pay, and the property is affordable to them.